Good afternoon. It is Tuesday, April 24th, 2007. This is Brian Shannon speaking from Alpha Trends. The markets closed. The spiders gained 9 cents today, the SPY. And once again, the short sellers are just being very frustrated in this market. As the gains continue to hold on, the market did sell off a little bit earlier in the day. And let's take a look at a 5-minute time frame. We can see that it did break down, came down just to the level that we were kind of really looking for support at. It went just a little bit through that, but the 147.50 level was the area we thought would be the better support area. That's where we have the rising 5-day moving average and this prior level of resistance. So the market continues to act strong here. There's no reason to doubt that it can't hold up. We do have one little reason for concern, and that is that we have a lower high and we have a lower low in here as well. So let's continue to really watch that 147.50 level. And I think if it gets below that level for probably more than a half hour or so, then we want to be a little bit more concerned. Some of the market leaders are breaking down. I saw today the Chicago Mercantile Exchange, CME. These guys usually have been going up just forever. And it was they did report earnings and sold off pretty strong. So this stock, I've noticed, tends to lead the market quite a bit. So it's definitely not the market by any means, but it's a reason to be just a little bit more alert. When you have stocks like that one, you have Research in Motion that sold off strong on earnings. You had Yahoo sell off strong on earnings. But then again, you can also make the very bullish scenario with this semiconductor action, because last night we had Texas Instruments and Altera come out with earnings, and they were viewed positively. Those stocks were up good, and that pushed the whole semiconductor group higher. Yesterday I was saying on the semiconductors that this breakout, what I'd really like to see would be a little bit more of a pullback so that we could get involved. But a lot of times when they break out from a high profile area like this, where it's been resistance for over a year, that it might not be that obvious that we would get a pullback. So the market did continue higher. We didn't get that pullback, but it continues to act very bullish. So the semiconductors act great. The Nasdaq 100 did break past this level and go out to a closing high. So we've got a new closing high for the year and for the last several years for the Nasdaq 100. And it did make it past that resistance level, that short-term level of resistance at $45.60. And we were looking for support down at 45.10 to 45.20. So the Nasdaq was a little bit stronger. It didn't pull back all the way down to its 5-day moving average or even test this more important level of support. But continue to keep an eye on this level, 45.20. That's going to be the area that, if broken, then it might put this recent leg of this rally into jeopardy a little bit. But no reason to think it can't continue. The trend is higher. We are in earnings season, so it's going to be stock specific to a degree, and you've just got to have a heightened sense of money management in here, because things can go wrong quickly if you're in the wrong ideas. This IWM, the Russell 2000, again, this is just kind of trading between these little levels of prior resistance at 81, which is acting as support now, and this old resistance up in here at about 82.60 or so. But it continues to act real strong. It holds up well. We've got a rising 10, 20, 50-day moving average. There's nothing to read into this action. It does act bullish, so a little bit more reason for concern that we have a declining 5-day moving average in here. But I think the most important thing for the IWM, the Russell 2000 right now, is that 81 level. Holding above there continues to keep this market in a very strong technical position as far as the Russell 2000 goes. Let's take a look at the stocks we've been involved in. EXEL, we got involved in this one yesterday at $11.05 a share. And now I think you can raise your stop up to $10.97 in EXEL. We're raising that from 1082, so taking 15 cents of the theoretical risk out of it. And I call it theoretical risk because you never know, the stock could gap lower tomorrow. Hopefully that's not the case, but we never do know. Polycom's PLCM, we got involved on the short side yesterday at 33.20. Our stop has been at 33.26. Let's lower that stop to break even right now. Let's call it 33.20. And that essentially takes the risk out of that position. JCOM, JCOM, We were looking to get long this stock above $29.80. That strength never occurred. There's no reason that you should have been involved in that one today. TGEN. Now this one I said above $4.78. It did gap up to $4.84. So I'm going to say officially we didn't get involved. But if you are involved in the stock, I would say you can raise your stop from what we had it at, which was $4.58, up to $4.74. So I'm not going to continue to update that one. It does look strong, but it didn't officially meet the entry criteria. So I'm going to leave that one to yourself if you are involved in it. Winn-Dixie, W-I-N-N, we were looking to buy on strength as well. Looking to buy this one above $19.10 a share. It gapped lower, continued to trade weak. No reason to buy that one either. FMCN, this stock we're looking Focus Media to get short below $37.40. That turned out to be the proper place to get involved on the short side. And right now I'd suggest that you lower your stop to break even in that one.